I was getting ready to do a post on Elon's tweet, which I'm going to cover that too. But I got a comment from, looks like EJ here, a couple hours ago. Just as I was getting ready, it's like, okay, I'm going to add this in there really quick. So if you see the quote, which it's on this video here I did called Why Are These Stocks Crashing? And we looked at Carvana, PayPal, Netflix, Peloton, Stitch Fix, Beyond Meat. And I tried to get into some of the bubble stuff we were into, and also how things like social media and Twitter and even TikTok can make you believe something's more trending than it is, and all this stuff. But this comment popped up, and they said, "Thanks for the video. I wish you did this video over a year ago." Well, you look back at the stock market sometimes, and no matter who you are, over my 20 years of trading, there's many times I wish I would have caught someone else's video a year earlier. um, Part of the game, right? Nothing goes straight up forever. And I'm not giving financial advice in any way. It's not what I do. I'm just giving some insights, some thoughts, where my mind's going this morning. But this person said they own Stitch Fix and they're losing big. They bought it when it was 21. Thought about selling it at 93. Thought it might keep going up. Sometimes when you hear these hypes on social media, common sense goes out the window. Yeah, I'm going to talk about that here in a minute. What else? Lesson learned, thanks, and subbed. All right, well, thank you for subscribing. Yeah, people are asking me to do more of this stuff. I get hit up on Instagram a lot because they watch my videos here and they go over to Instagram. You can follow me over there at JamesPhillip313. Drop me a DM if you want. But they like the stock stuff, they like the money stuff, and I do a variety of things from cars and tools to money to life to careers and business. I'll try to do more stock stuff, but I don't think I can just do all stock stuff. I'll get bored. But this thought right here, this hype on social media, I think that's something like I think the market's learning about the alternative meats, for example. I'll show you the Stitch Fix chart here so you can see how bad this person is probably feeling from the pain right now. But going back to like the Beyond Meat type products, and I'm invested in restaurants that started using some of those products as well, and they're not great sellers. It's not actually a Beyond Meat product; it's a different product. But overall, if you get on Twitter and you look at TikTok and some of the different social media sites, they make you seem like nobody wants to eat meat anymore. They only want this like plant-based meat, and that's what everybody wants right now. And you realize what's on social media and what shows up in my analytics for inventory consumed at the restaurant or restaurants doesn't match up. There's certainly a market out there for that type of food. There are people that live that lifestyle. So to say there's no market is also wrong. But the market is not nearly as big as you think it is. And now you've seen places like Burger King back off the Impossible Whopper. In fact, when's the last time you actually seen a commercial for that? So while I was on TV and commercials and all this stuff, plant-based, 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 and then you saw some of these companies that were doing those products start taking financial hits because you spent a bunch of money and then the market wasn't there for it. We got to stop looking at social media, and I don't jump on social media to make my big stock decisions. Right? It's going to take a little bit more than that. But you start believing the hype. I think that the same thing's going to happen to the auto industry right now, where everyone's pushing electric vehicles. Because if you jump on Twitter or TikTok and wherever the hell you want to go, even Instagram to an extent, that it seems like everyone wants electric vehicles and all ICE engines they suck. I don't want gasoline no more. No diesel engines, get rid of them all. And then when you look at the surveys, Kane did a survey over at Daggerfin, and I want to say, I forgot the number off the top of my head, 20 to 30% of people at the most said they were interested in an electric vehicle because of gas prices. And that's because of gas prices. Right? I think that number is smaller when the gas prices go back down. Maybe it's like 10, 15% total. But you got the automakers going all in on electric right now. And it's like, man, if 70 to 80% of the market's saying they don't want electric cars and you're going all in on electric cars, this probably isn't going to end well. And again, we start believing social media and we start making business decisions and financial decisions and investment decisions based off social media, and it's wrong. the thing is, like, you turn the TV on, and now Hollywood's that way too. Hollywood's got you thinking that everyone drives an electric car in the Tesla, and they want Beyond Meat. You open up one of the news sites, and it's doing the same thing, and you're completely just pounded with it nonstop. And then you get in the real world, and you realize that's not what the masses actually want. You're kind of being programmed to believe this. So I never thought, like, as far as the business model goes, Stitch Fix, it might have worked for certain people. I just don't know how that was going to work at scale. When people got a bunch of money, maybe it's pretty cool. But as things start to get tight, it's like, I don't really need my clothes shipped in a box. What was the other company, like Blue Apron, that did the food? I never thought it was going to be a great idea to, like, send people these prepackaged meals in general, because, can the bottom 80% of income earners afford that in the long run? The last 2 years, we had a lot of stimulus going on, a lot of extra money, a lot of unemployment. Everything went up. In the long run, though, do I want to pay someone to ship me food in a box? It's like, look, I can dice up some boneless, skinless chicken, saute it in some olive oil, and throw in some green beans, some salt, pepper, garlic. What else could we put in there? I don't know. Hit it with some lemon juice, sprinkle some Parmesan cheese on it, maybe a little more olive oil to make it all stick. I don't need, like, there's so many recipes online. Like, I've been cooking since I was like 13. It's maybe it's easy for me because I like to cook, but even if you don't like to cook, between cookbooks, YouTube videos on how to cook, and all the free recipes online, I don't need anyone to send me food in a box. So when it comes down to it, the one thing that also beyond Elon's tweet, which we'll get to here, actually, hang on a second. I got to talk about this chart. Elon's tweet, which we'll get to that in a minute, was also sparked by that whatever conference Warren Buffett just did. And I'm going to come back to that. I'm going to talk about Warren Buffett and this Elon tweet. But if you take a look at the Stitch Fix chart, like, we're going sideways here. Which, a lot of stocks that are trying to, not stocks, but a lot of companies that are trying to figure themselves out. We're going sideways, unless this was some kind of reverse IPO, and I don't know it because I don't even know when they IPO'd. And does it show it anywhere? Yeah. Don't know, don't care at this point. Right here we had, which you're going to see this same trend in many places. We had this kind of COVID boom where it hit, the big dip right there. You can see my screen. This is when everything tanked. And then we started printing money. We started doing unemployment. We started doing PPP. We got stimulus checks. They said something like, of the 800, and I'm ad-libbing numbers here, don't quote me, of like the $800 billion in unemployment we did, like there could be 200 billion to 400 billion in fraud. It was a crazy number how much unemployment fraud there was. Absolutely insane. All that money went into cryptos. It went into buying retail stuff. It went into NFTs. That money went everywhere, right? For many people, it went everywhere, but it seems to pay down school loans. But anyway, that's a whole other topic. This is the flood of money. M2 money supply, boom, rockets up. People are buying this thing up at $90 or $100, thinking the party was never going to end. Music started to slow, and kind of like what they call that, a dead cat bounce on Wall Street. Comes down, bounces back up. I'm guessing this is around June or July. It's around June or July, if you remember. There was a slowdown in the money, and then around June or July, they were talking about ending the moratorium on rent and foreclosure, so they're going to start kicking people out again. Nope. They extended that to the end of the year, including the school loans. So people started to get worried, like, I'm going to have to pay my rent. I'm going to have to pay my house payment. I'm going to have to make back payments. I'm going to have to pay my school loans. We started to panic, and then it was like, nope, we're going to extend that until like January. Boom, right back to spending. And then things started to get real. Started the question, are they going to extend the school loans? The foreclosures are going to start. You're going to have to pay your rent. And then things went down. So now we're at $9. This person over here said they bought it at what? They originally bought it at 21. It was at 93. Oh my God. Should have got out. Man, at that point, you're up that much. You got to go. You got to take some profits. Sell half. Sell half and let the rest ride is what I would do. I remember walking into my CPA's office in 2000, 2001, whenever the bubble popped. I was one of the few people in his whole practice that walked away with some money from the tech boom. Two things I learned. An old timer when I was like 18, 19 years old told me you gotta let money rest. You leave it in the market all the time, and it's kind of like the casino. Doesn't matter what game you're playing. You can be way up. If you decide to sit at the table, sooner or later they're going to get it all back. I was resting some of my money at the time when the market crashed, and two, when I got crazy, you're buying stuff at $2 and it goes to like 25. You sell some of it. You take some profits and you let the rest ride, and if you lose it, you lose it, but you're still up. In this case, man, what I would have done anyways, and I'm not giving you advice here, it's just you're up, 3-4x on a stock. You take some profits. You let the rest ride. Man, that sucks. And markets bounce back. You'll bounce back, dude. So let's go over here and talk about Elon's tweet. So since I've been asked, buy stock in several companies that make products and services that you believe in. Put an asterisk there. Only sell if you think their products and services are trending worse. Don't panic when the market does. I mean, general stock advice, right? And the question is, and this ties in with what Warren Buffett just said about Bitcoin. I did another episode on that because Buffett came out and says, if you gave me, all the Bitcoin in the world for $25, I wouldn't buy it. Now, he probably would buy it, but he's trying to make a point. What he said was, if you offered to sell me 1% of all the, real estate or, apartments in the country, sell me 1% for $25 billion, I'll write the check. If you're going to sell me 1% of all the farmland for $25 billion, I'm going to write the check. And what he's trying to get at is he's going to write checks for things that we absolutely need that aren't going away, that you can't even question. We need farmland. We got to grow food. You need homes or you need apartments because people got to live. This is how you preserve your wealth, and that's what I talked about in that episode, is wealth preservation. We focus so much on getting rich, trying to flip NFTs and doing this Bitcoins and where Bitcoin's going to go and this stock and this small cap and this growth fund and get rich, but we don't ever talk about how to hang on to it. So I'm all about getting the money in the bank and keeping it there. And over 20 years, that's one of the goals. If I invest in a business, I got to have a good reason to do it. Maybe I want to grow an existing business I have. I got to look at all this stuff and say, what is the risk reward? Do I want to grow this thing organically? Do I want to take out a line? If I'm going to pull the money out of my account, though, I need a goddamn good reason. Because that's wealth preservation. And I think that's what we're looking at here, where Buffett's saying, hey, I'm going to buy things like real estate because people need to live. I'm going to buy farmland because people need this. I'm going to buy XYZ shares in this food because we got to eat, or I'm going to buy into this bank because we need banking. Do we need our clothes shipped to us in a box? It's not necessary. It's a luxury, but it's not necessary. The Carvana thing where you can buy I just drove by one of those. I didn't even realize Michigan had one. The vending machine. Do you need to buy your car from a vending machine? I mean, it's whatever, marketing and PR, but it's a gimmick, and gimmicks usually die, and it looks like Carvana's getting hammered. You don't need to buy your car from a vending machine. I bought cars over the email. You can almost buy a car through text messages today. It's crazy. So you don't need to do that. And while we like plant-based meat, do we need it? It's a lot of people I know just eat tofu. It's like there's options out there for people who don't eat meat, and it doesn't have to be an option. I mean, what's that one? Was it Morningstar Farms or something that had the black bean burgers? I mean, there's been products out there for a while, but we don't have to have a plant-based chicken, right? It's nice, but we don't have to have it. We don't have to have Peloton. After COVID was left, we come to find out, I don't need to ride the spin bike in the basement. I can just go for a ride outside. So again, Peloton, nice to have, don't need it. And you see, that's like Warren Buffett's philosophy of, I'm going to spend my billions of dollars on things that aren't questionable. You got to eat, you got to have a place to live. Hell, we all die, so maybe he's invested in funeral homes for all you know. There's things that how he makes his investment choices and how he's preserved his wealth and stayed on top for decades is by picking things that people need. So what Elon's saying here is buy stocks in several companies that make products and services that you believe in. Now, you can believe in something, and it might not be a good product, or you could believe in a service, but we don't really need it. Which, looking at, there's many services out there that have just went up and has crazy crashed. I mean, here's Netflix for you. Once call it COVID hype, the COVID bubble. We had a bunch of money and we were stuck in the house. Of course, things like Peloton and streaming services were going to be at their absolute peak. right? We're stuck in the house. We're literally locked down just about by law. That was probably as good as it was ever going to get for Netflix. We're trapped in the house by the government, and the government's giving us money. Once that money's gone and we can leave the house, all of a sudden that demand goes. And then, my own opinion, Netflix just doesn't have anything I want to watch. They talked about when was it Lee Iacocca's story, doing a turnaround situation. If you build cars people want to buy, you don't have to market them. People market them for you. You see them on the road, they want to buy one. Terrible cars need a huge marketing budget. So the thought was, if you design cars that had performance and looked good, they sell themselves. That's kind of where I look at with Netflix. Like, if you got no movies to watch, then I don't want to buy you. So you see all these things, and again, do you need Netflix? Inflation's going up, gas prices are going up. It's where are you going to spend your money? It's not that hard. So when I'm looking at investing right now, it's I kind of believe in contrarian to an extent. I'm looking for companies that are beat down, that aren't going anywhere, that are kind of necessary for society to function. Why does Warren Buffett pick Bank of America? I mean, if that one drops a little bit more, I'm probably going to look at it. Chase, people that manufacture food. If you see the home builders take a beating here when interest rates go up and they're not like within bankruptcy, I'm probably going to take a look at those. There's a certain things I'm going to look at that I know we have to have. But so many of these, like software as a service companies, unless you're business class, the B2C market's a whole other conversation. That stuff can get canceled. But these things that we don't need, they're just luxuries. I'm not that excited about them. And we get caught up in these growth stocks where, like this person just had, they're up, from 21 at one point to 90 something dollars. These growth stocks, it's hype. You got to ride those waves and get out, is how I see it anyways. If you think like this thing's going to go to the moon and end up being $100 billion company, you're out of your mind. You can't make investment decisions that way. But I'll tell you what, if you read social media long enough, you can believe anything. Here's the real lesson of the story, though. I've been talking about a bubble for almost a year. Probably before I started doing videos with Kane back in August. I've seen this in 2001, and I've seen it in 2007, 2008. What it comes down to is when things are so good, you never want them to end. So you start rationalizing why it's never going to end. You think it's the new normal? And God forbid you start talking about it ending, which I have done. People will start calling you negative, that you're a doom and gloomer, and that, if you keep wishing for it, it's going to happen. I'm like, no, I don't. It's going to happen whether I want it to or not. And the thing is, when things are good, no one wants to think about the good things coming to an end. And all good things do come to an end. We pumped in 6, 7, 8, 9, who knows, $10 trillion, lost count. Money supply went up. And if the stock market's at a certain level after you pumped in 10 trillion and then you stop pumping in money in, why do you think it's going to stay up? Why doesn't anyone get this? I don't understand this. Things are going to drop. We created bubbles within bubbles within bubbles. I'm seeing properties that were selling for $1.5 million, all of a sudden selling for $2.8 million. It's like, wait a minute, that house went up over $1 million? Like, there's no way in hell that house is worth that much. Some people are paying it right now. Have a feeling they're going to regret that in about 12 months. But the problem is, when you're having a good time, you don't want the good time to end. And then you start convincing yourself that it's not going to end. And it doesn't end until it does. And we're starting to see that music slow. So, right now, you can, ride it out until the police come and break up the party, or you can, I don't know, do you cash out and head to Denny's and get some breakfast while you still got a few bucks in your pocket and head home. Anyways, that's all I got for this one. Crazy times in the next 12 months. No one's really got a good prediction other than inflation's high. The Fed's probably going to overreact or underreact because they're going to try to do a soft landing, which we all hope they do. But I just saw manufacturing numbers were down too. So we already had a bad Q1. And manufacturing, out of what ISM, the manufacturing production numbers are down. Just not looking good. They're going to probably hit us with another 50 basis points one or two more times. Man, if things are bad, you might even see as much as 75 basis points on one hit. Mortgages are going to be 6, 6.5%, 7%, depending on your credit. Housing market's going to slow down. The layoffs are going to hit. And here's a tip, just keep watching Google, type in warn notice. If you find a warn notices, you'll start seeing how many, you might be able to look that up in Google Trends. If you're a certain size company and you're going to lay off more than, I think, 50 people, I don't know the exact number, you have to put a warn notice out like 30 days in advance. When you start seeing those things go up, combined with interest rates, hang on. Going to be a bumpy ride. Anyways, until then, I'm going to catch you on the next one.